Okay, Matt Orton is now joining us, Chief Market Strategist at Raymond James Investment. Matt, good to have you with us here. Good morning. Thanks for your time. From the last time that we spoke, mid and small caps here in India had one large down day. Indices were down 3, 4, 4.5%. But since then, some repair is underway. I don't know if you just heard Chris Wood of CLSA pointing out that oil perhaps is a worry globally. It should be a worry here in India as well. And he says some correction perhaps is expected, should be expected in that part of the market. Your thoughts, Matt, given what we've seen?
Good morning, Prashant. And I think he's right. I think with respect to oil prices, we talked a month ago, and my thesis was that oil prices were going to continue to rise because the demand is stronger than I think a lot of investors gave the economy credit for, and there are supply constraints. We've underinvested globally with respect to getting oil out of the ground and getting it around the world, and the ongoing conflict in Ukraine and Russia certainly doesn't help that. And so I think that can certainly put pressure on the small cap story in India. But again, valuations aren't that extended, and since they are tied a little bit more to an economy which continues to grow, and I think as an asset class in India, just like it is in the US, smaller companies are under-owned by investors. And so I actually like small caps quite a lot longer term, both in the US and in India, because I think there's opportunities to extend. The key is leaning into quality companies. So as you're looking at smaller companies, there's a big dispersion between those who have earnings or a path towards profitability and those that are lower quality. And I think this applies not just to smaller companies, but to the indices more broadly. Being active makes sense, and leaning into high quality, I think, is going to be the way to play that part of the market going forward. But being opportunistic, I think, makes a lot of sense on downside.
So leaning into higher quality, you mean that you stay away from the mid and the small cap space, because that is the narrative in the Indian markets now that, after the kind of run-up we've seen, perhaps it's better to be cautious in the broader markets. Would you agree?
Well, Sonia, I think a lot of people would have said to be cautious about India in general, just after the big run-up that you had, you could say last year, given how much it outperformed. You could have said that earlier this year. You could say it now with, the Nifty trading at all-time highs. But I don't think just because something has hit new highs, that's not a reason in and of itself not to own it. So sure, in the very short term, it is extended. And I would wait to be putting new money to work, especially in small and mid companies in India. But on a sort of pullback or healthy consolidation, I think that presents a good opportunity because the longer term thesis is there. And quality, even though smaller companies might be lower quality than large, there's still opportunities within that small part of the market to outperform for companies that do have that profitability, better balance sheet characteristics. And you tend to see that cohort of companies outperform over the longer term. And so I would say whatever part of the market you're looking at, you want to lean into those factors because that's what has actually been outperforming over the past couple of weeks.
Matt, good morning. That's interesting. So you're saying that you wouldn't be averse to putting money to work again in Indian mid caps on pullbacks, right? That's what you're saying?
Correct, on pullbacks. I think in general.
Yes, I was just going to ask you that if you have the conviction, then which you seem to, then in mid caps, what themes would you look out for? For instance, the public sector enterprises here, they've had a phenomenal rally, railway stocks, defense stocks. So do you go back to the same themes, or would you be looking at newer ones that may interest you?
So I think, Surabhi, it's two-sided. I think within the same themes, infrastructure has been something I've been talking about a lot. I think the long-term secular opportunity within infrastructure plays, both down market cap and in larger companies in India, is a really exciting opportunity. Because when you look at what's driving a lot of the enthusiasm, in particular from foreign investors in India, it's that it's winning from what China has lost. It's that supply chains are moving to India, and that's going to take a long-term cycle of infrastructure investment that you're starting to see come to fruition as well with the roadways that are being built, the new road opening outside of Mumbai. That's all tangible for foreign investors to see that progress is being made. So I think that play continues to resonate. But I also think what's interesting, I just actually spent the past week in Israel meeting with clients and meeting with a lot of startup pre-IPO companies. And the enthusiasm around recovering tech budgets, I think, is a theme. And that's probably why you're seeing companies like Infosys outperform. But I think that translates up and down the market cap spectrum, is that IT budgets in general, especially for large multinational corporations, aren't as constrained as they used to be. And so I think that starts to open up new opportunities in the IT services space. And that's an area that I would start to lean into right now as a new opportunity going forward.
All right, we'll leave it at that. Thanks a lot, Matt, for joining in and giving us your view. So that's the word coming in on how you should approach the markets. Crude is something that could put a bit of spanner in the works, especially for the broader markets. Perhaps there could be some selling pressure there. But otherwise, he likes the Indian market space. Let's slip into